Hey, so we had some major headlines this week, but I want to dive a little bit further and give you a couple takeaways from this week. Hey, so welcome to this week's Mortgage Minutes with Mitch. I am Mitch Jenkins, Senior Loan Officer with Your Home Financial. So, biggest headline, obviously the election. We have a new 47th President of the United States. Regardless of who you voted for, I mean, it's time to come together. It's time to move forward, because regardless of what the media is saying, we are not going backwards. And the other big takeaway was the Fed's meeting this week. So they did go ahead and lower the federal funds rate by another 25 basis points, which is basically what the market expected. And we actually saw a little bit of drop in mortgage rates, which is great to see. Now, some other quick points I want to highlight. New home sales for the month of October accounted for about 28% of actual home sales. Now, the high was back in 2022. That was about 34%. So 1 in 3 homes selling in the market were new builds, showing how tight inventory is. Because a normal market, new homes are only about 10%. Now, home values for all you current homeowners or want to be homeowners still went up another 0.2% in the month of October, according to CoreLogic, and they came up with 3.4% year over year. So although the pace at which homes are appreciating is slowing, they are still going up. And Black Knight, another big reader in that, they have home values up 2.9% year over year. So it is still a solid investment with projected growth going forward. Now, one thing I want to point out is that if you own a home and you're interested in maybe tapping into your equity, yes, it can be a great time to do so. So the estimate for the country is about $17.2 trillion worth of equity for current mortgage holders. Now, of that, because you can't tap in 100% of your equity, you can only go up to about 80% of that. There's $11.2 trillion available to homeowners if they want to tap in and maybe consolidate some debt or do some improvements. Now, if you're one of the many who think that, hey, I'm going to wait till rates come down, but are having a hard time kind of affording things, definitely look at a tool that I can offer called the blended interest rate calculator. And this is great for homeowners that are, weighing on whether or not to tap into that equity to maybe consolidate some higher interest rate credit card debt, because the blended rate calculator will break each balance down by the rate and give you that blended interest rate, so you can actually see what the real rate is you're paying on all of your debts. So even though mortgage rates are maybe a little bit higher than you're hoping, it should and could be quite a bit less than what you're paying when you combine all of that non-mortgage debt. So each individual out there averages about $38,000 in non-mortgage debt. So you take a household with 2 parents, 2 income earners, that could be up to almost $80,000 in non-mortgage debt that you might be able to roll in and have a much better benefit and quality of life. So if you want to look at that, or you know anybody that's interested, I'd love the opportunity to work with you, do that, run those numbers, and just find out if it would make sense for you. So before I go, I want to say a huge thank you to all the veterans. Monday is Veterans Day, of course, so thank you for your service. So as always, thanks so much for watching. We'll see you next week.